Are you getting a mortgage soon? Are you a doctor and thinking about getting a loan to buy a house and wondering what are the best questions to ask your mortgage lender? Well, today, that's what we're here for, to go over the top questions to ask your lender. Hi, I'm Cynthia Grimes. I'm a real estate agent and hope to be your real estate consultant for life. And today I am here with Ed Cremmins of Fulton Mortgage, longtime friend and associate, done a lot of loans for many of my buyers, and we're going to go over those questions. So tell us a little bit about yourself and your company.
Thank you, Cynthia. Yes, my name is Ed Cremmins. I am with Fulton Mortgage. We are a division of Fulton Bank, a small community bank in the Maryland area. It affords us a lot of opportunities that the big banks that aren't available with the bigger lenders.
So we find that buyers typically have a lot of questions about the loan. So today we're going to start with what some of those questions are. And a very common question is, how much money can I borrow to get a loan?
Well, where I like to start with my clients in the very beginning is where their comfort level is with monthly payments. And then I work backwards from there to determine what they can afford, because ideally we want to put you in a home that you can afford. So once we determine what your payment is, and once we determine where the general area that you're looking to live in, then we determine from there and how much money you'd like to put down. Then we can come up with a figure as far as how much you'd like to borrow.
Well, that's something we definitely agree on. Not that we always agree, but we definitely agree on that. I like to make sure the buyers are comfortable and not just going for what they were qualified for, but what they're comfortable for after they go over their budget, and make sure they have enough money left for the fun things too. Because it's no fun to own a house if that's all you can really afford, right?
Oh, right. It's a life of misery to be in a home you can't afford, I can assure you that.
Now, the next question we get is, how much money do I need to put down?
That's another, situation where I learn a little bit about what your goals are and what your needs are, what your future plans are. I know I'm not a financial advisor, but I can kind of get you in a direction where you're starting to think of that a little bit. If you are looking to put as little money down as possible, we've got some products that can help you with that. If you're looking to put down a sizable amount to buy a bigger home and have a lower payment, we can look at options there too.
Okay, and how about interest rates? What are they today? And something I hear every once in a while, a buyer will say, I have to pay that much interest rate, and I just shake my head because I think they don't realize how high rates were before and how appealing the rates are today.
Yes.
Ed, were you looking at yourself again on the camera?
I'm distracted by this. It's like I'm
it's
not.
Always about you.
I know.
You can see we know each other really well. I knew he was checking out himself. Okay, all right. Now back to the interest rates, Ed. Come on.
Back to the interest rates. So basically it is. Interest rates are a relative thing. People. If you would have known that we were going to be at 3.875, 3.75, in 2020. You would be shocked. But if you're, being quoted a rate close to 4%, you would probably feel like you're getting ripped off. Like that you could do a lot better. So rates are only as good as what you see advertised or what you expect them to be at any given moment. And let me caution you: if you're looking at rates online or in the newspaper, be careful, because what is advertised is typically not what's available, and if it is available, it typically comes at a high price.
Right. So watch those calculators too. Make sure they include the principal, interest, taxes, and insurance, so you're not getting overexcited about what you can afford. And that's what Ed's here for. He doesn't mind that call for those questions to run the numbers and do some comparison for you. Now, while we're talking about interest rates, how about adjustable versus fixed? What are the differences and the benefits? And what's good for one person versus another as far as how do they choose?
Well, that's another strategy kind of question. 30-year fixed, you pay a little higher interest rate to have an interest rate that long, but typically you're not going to make 360 payments over a period of 30 years and then, have the mortgage go away. Typically, I think on average, people have their mortgage for 7 years, is anywhere between 5 and 7 years. So, what an adjustable rate mortgage allows you to do is take a much lower interest rate. If you're not going to be in that home for more than 5 or 7 years or 10 years, whatever the case might be, maybe consider taking an adjustable rate mortgage and pay much lower interest over that period of time. And then you'll either refinance, sell your home, different things like that. So there's advantages and strategies for adjustable rate mortgages and 30-year fixes.
And an adjustable rate mortgage isn't right for everyone. I've done it myself, but I predicted that the rates were going to go down, and you can't always guarantee that, but it worked out for me, and I knew I wasn't going to be there very long, so it was good. So how many points does it take, and what is the point to get these attractive rates today?
Well, a point is 1% of the loan amount. And, the interest rates you see quoted come at a price. So, there's what we call a par price, where this is the interest rate and you don't pay anything for it. That's where we are. There's an interest, when interest rates go higher than that, you actually get money back from the bank. Interest rates that are lower than that, you actually have to pay money to the bank. So if you want a lower interest rate, you might have to pay a percentage of the loan amount, or a fraction thereof, and you'll get a lower interest rate. Now, does that make sense? Well, it does make sense if you're going to be paying on that mortgage longer than typically around, again, 5 years. It typically takes about 5 years for the investment you make to pay for that point, to get the lower interest rate, for you to realize to get back into the black, where the money starts working for you again. So 5 years is the number to think of there. And if you're going to be in there for longer than 5 years, maybe paying a point or a fraction of a point for the long-term interest rate would be a good idea.
But right now, with the rates being so attractive, I imagine not many people need to get a point or pay that point. So it's not something you definitely have to do. It's just an option.
Just an option. There's that, and that's the thing that we have. We've got options to help you get to where you need to be with your particular situation. Everyone has a different story. Everyone has a different situation in their life, different plans. And it's kind of my goal to understand what you're looking for, get you a mortgage product that suits you directly.
Okay, so now we're talking about interest rates. The buyers found a house and they're ready to put the contract in, the offer gets accepted, and they ask, do I lock my rate or do I not lock my rate? Because a lot of buyers are worried if maybe they could save a little bit by waiting the lock, and I have some concerns about that, as I'm sure you do too.
Yes, that's always kind of could be a little difficult for folks, because they're trying. Rates get updated every day, and when I say updated, sometimes they can stay the same, sometimes they go up, sometimes they go down. Sometimes rates can get updated multiple times during the day if there's volatile activity on the market, good or bad. So it's a bit tough to shoot that fish in the barrel and get it on the first shot. As far as like. I don't know if that was a good euphemism.
How do you shoot a fish? That doesn't make much sense to me,
Yeah, well, I'm in Carroll County where a lot of fishing goes on.
But
so,
we don't shoot a fish. We hook a fish.
Yeah.
Try that again.
Okay, so rather than shoot any fish, just talk to me about it, okay?
Okay.
No, what I'm trying to say is it's like shooting at a moving target. That's what I was looking for. Because the rates change a lot. Forget the fish.
Okay, well, forget the fish. So how about estimated closing costs? How can a buyer know what to expect in closing costs?
Well, you have your typical lending fees, and you've got your origination and appraisal, and then you've got your title fees. Okay, then we've got to collect a couple of months extra for taxes and insurance to create an escrow account, because when you make your payment, we'll be paying your taxes and your homeowner's insurance, and then you've got to pay transfer taxes. And in Maryland, we're pretty high. So if you're coming out of state, don't fret too much. It is what it is type thing. We've been used to it here for a while.
Right.
But those are your closing costs, and you add them all together, and that's called the settlement costs. And they're part of every quote that I provide you. You'll have them all enumerated, and we can talk about those.
So when someone's buying a home, what they want to think about is the amount of money they'll have to put out up front. Part of that is they're going to pay the appraisal fee to you, which is $475.
$475.
And then you're going to need money for your inspections, such as home inspection, chimney inspection, radon, well, septic, water quality. There's also some neighborhoods we know it's advisable to have a sewer line inspection, and I would help to guide you with all of that, but you would need that money up front. As far as the loan program, it's going to depend what your total closing costs will be depending on what kind of programs you get in. So there's conventional, VA, FHA, USDA, cash. So the differences between them are the cost, the time frame, and the amount of money down.
Mm-hmm. So
if you want to say a little bit about the differences between those loan types and which might work for someone and why.
Well, for for VA loans are awesome. I think it's so great that we are able to give back to our veterans of service, because that's, in my view, is the best program out there, is a VA loan. So that's one thing. Now we also have FHA, that's 3.5% down, but there's some drawbacks to that on a number of levels. You put less money down, but there's more to it as far as you'll be paying mortgage insurance for the entire length of the loan. But then there's also conventional, where you put 5% down, a little bit more, but the mortgage insurance drops off after the loan amount has gone down to the point of 80% of the value of the house.
Well, since you like to brag and always do the best, a conventional loan, you can close this in 2 weeks, right, Ed?
In my dreams, no.
We'll try.
I mean, not that I couldn't call the horses in. If Cynthia called me and says I need this done in 2 weeks, that I would, as soon as I get it all together, get myself together and look at what we're working with, I might be able to help you in that regard. But typically ideally we like 30 days. I'm finding a lot of people just need it done in 3 weeks to 30 days, and we haven't been late on a settlement yet. 60 days is kind of a luxury, but that's a little long. 45 days is kind of where I think we should be. 30 days is what we're comfortable with. Anything shorter than 30 days, then it's going to be on you too as well to actually, most of what our success in meeting that time frame is more dependent typically on the buyer than it is on anyone else.
On you, the buyer. So it's not I don't want to say it's not an easy process to get a loan. We do try to make it as easy as possible, but it's a process. So you've got to get all your paperwork ready. You've got to send to Ed or his processor whatever they need, and you need to do it promptly in order to close on time. So that's really going to be the key. And don't get stressed about it, because as soon as you send something over, they'll want something else. It's just the way it goes. It doesn't matter which lender.
It is. Yeah, we try to be as customer service focused as possible, but closing a loan these days in the world we live in is a much more rigorous process than it was 20, 30 years ago. So we try to get everything up front. We like to get you approved early in the process so that you can focus on the other things like packing, getting your kids registered in school, and all the other things that go along with moving. We try to get this part out of the way as soon as possible so you can focus on other things.
So there's lots of products to choose from conventional to VA to USDA, conventional and cash. USDA is a rural development loan, and you could get in for 100% financing. And if we get the sellers to pay your closing costs, you might even get a few dollars back at the table.
Yeah,
need a little bit more time on that loan, though.
Yeah, that one's a bit rigorous.
Okay.
Yeah.
But it's a good program if you're just starting out, or you don't have a lot of cash to work with and you want to get in for a little bit of money. We just need a little bit longer, because once the underwriter at the lender approves it, we need to get it out to USDA for their approval. So let's tell the buyers, or a question the buyers asked me is that, what could delay my closing? That's a loaded question, but because there's a million things that could, but what are common things you're seeing that delay the closing?
On our end, typically what delays the closing is getting what we need from the buyer. And I would say 90% of the delays have been for that.
Yes, don't delay. When they ask for something, they want it right away. It's just how it is, and there's a reason, because it is a tedious process to get everything done. So be sure to get everything in quickly. Now, Ed has given me some information here on some wonderful products that he does. I'm going to save this one for last. One of my favorites for years, so we'll talk about that one at the end. But he has some wonderful programs for medical professionals, and I'll let Ed talk about that and who that would be good for.
Yes, so we offer what's called, we like to call the doctor loan, but it's the medical professionals loan. And what it does is, if you are a doctor, a dentist, a pharmacist, or a veterinarian, and you've been practicing less than 10 years or less, then you may qualify for 100% financing with no PMI up to $1.5 million.
1.5 million. That's crazy for 100%.
100% financing, yeah, and there's a handful of other banks that offer doctor loans, but nobody offers doctor loans to dentists, pharmacists, and veterinarians. No one goes up to $1.5 million, 100% financing, and no one offers up to 6% from the seller. And today, our interest rate for this loan is at 3.5%. So it's the best doctor loan out there, and it's also the most expansive in the fact that we offer it to other professionals in the medical world.
So they can buy a home for $1.5 million, get the sellers to pay their closing costs, so maybe even get in on a high-end house for nothing.
Maybe. Yeah, theoretically, they could literally walk into a house from a $1.5 million house without putting a dime down.
And the other great part to this loan that Ed told me about was that if you've got student loans and you're worried about them counting against your debt ratio, is that if the loans
are deferred for a year or longer,
right? Okay.
Yeah, then we don't count that towards your debt ratio.
So if you don't have to make your payments for a year or longer, that won't even count against you, and that's a great thing because when you're in one of those professions, a lot of times the buyers do have loans from going to school, so perfect. So going into our other one, which is also very attractive, is the 30-year fixed rate jumbo loans.
Yeah, so jumbo loans are loans above $583,000 that basically are, everyone offers jumbo loans, but most of them have to go outside their bank and go to the big banks like Bank of America, Wells Fargo, and a few others. And it's being underwritten twice. It's a long, arduous process, and it's brutal, Whereas we get to do it, being a small bank, we do it through our portfolio. It's our money, and it's underwritten once, but we also get to control the terms. And our terms today is basically we go up to 95% financing up to $850,000, which is much higher than others. Others, if you're up to $850,000, you're probably putting 10% down. Okay, so that's one thing to keep in mind. Another thing is we allow 6% from the seller. Okay, and our interest rate, most importantly, our interest rate for jumbo loans can't be beat out there. I've yet to see anyone touch our interest rates for jumbo. We're at 3.5% today, January 30th, for a jumbo loan. Okay, so nobody can touch it. Now, if you are a jumbo buyer, I suggest I would advise you to ask Cynthia or talk to me about getting a quote at least, just to compare to what you're looking at out there. And again, the process is much easier than going through other lenders and going through a bunch of different banks to get one loan. So.
And your underwriters in-house?
Our underwriters and processing are all in-house. We all in control of our own stuff. We don't send them out to some other entity somewhere out in Tuscaloosa, Alabama, and you're just a loan number. No, you are a person that we talk to and work with every day to get to the settlement table.
And I love that. It's so nice when we have a question or we need something or there's something that's a little out of the ordinary, you can just go right to that underwriter and get the answers for us.
Exactly.
So perfect. And the last product, one of my favorites, not as common right now in this market, but it's the bridge loan. And you and I did many of those years ago. So what is the bridge loan today, and how could that benefit a buyer today?
Well, honestly, have you ever, been driving and saw a bridge and thought to yourself, man, I'd love to own this bridge? Well, you can come to me, and we will get you a loan to buy that bridge.
Never wanted
that's the wrong bridge loan. Okay, I'm sorry. No. I got a bridge to sell you, right? No.
Right. A bridge loan for a seller who wants to be a buyer.
Got it. Oh, okay. Here we go. I should leave my jokes at the door before I walk in. But anyways.
I'm used to it. I've had to do this for years with him now. Bridge loans.
Bridge loans. Okay, so a bridge loan is like this. Okay, so if you own a home and you're like, okay, this home is too small, and we've got more kids now. We need a bigger home. We've got some equity. We want to sell. Cynthia, we're looking to sell this home. If we sell this home, we'll have about $60,000 from the sale of this home that we can use towards the purchase of the next home. Makes sense, right? So then what happens is Cynthia says, okay, that sounds great. So you basically go out and you get pre-qualified, of course, first. You go out and you see a house and you just fall in love with it.
They fall in love, and their house isn't even listed.
Gotta have this house. It's an emotional buy.
Yes, they're like, I love it. I'm like, hold on, I'll call Ed. And I'm like, Ed, help. What do we do?
Yep. So what happens is Cynthia feels this pressure. This is why she loves this loan, because she feels the pressure. Because basically, what Cynthia has to do to make your dreams happen is Cynthia has to sell your home in time to free up that $60,000 or whatever the case might be to put down on the next home. So that's all on her, and she's feeling it. And she's seeing the emotions, she's seeing the kids playing in the yard
Keeps
already.
me up at night.
Right, the dog's running around, just feels, loves it already, right? So what we do is, if we know in advance that you're going to need this $60,000 in equity, is we pre-qualify you for the purchase of your next home, but we also pre-qualify you for this bridge loan. And what the bridge loan does is we take that equity up front, and we're able to use that without either, before you have to sell your current home. So what does that do for you? Well, it removes the stress of having to sell this home in time. It removes the perfect storm needing to be happening. So it removes that stress, but it also does something else for you. It helps Cynthia negotiate a better price for you on your new home because you are now a non-contingent buyer. Okay, you are non-contingent. In other words, you are the seller for the home that you're looking to buy is going to look at you at a whole different light, because they're like, okay, well, I'm not dependent upon Cynthia selling the townhouse in Reisterstown or whatever the case might be to buy this house. They can just buy it. So I hope they sell the house in time before they buy this new house. But if they don't, I still have a sale. That's what they're looking to do for their clients. So that helps in your negotiation.
And it's so important right now because we're in a low inventory situation. So if you're offering on a home, the chances of having multiple offers are pretty high with the low inventory. So being able to go in non-contingent on the sale of your home makes your offer way more competitive than someone else's. So I think that about sums it up for today. So when you're looking to buy a home and you need a mortgage, make sure you've got Cynthia. I'm Cynthia Grimes, and make sure you've got Ed. It's Ed Cremmins with Fulton Mortgage.
Thank you
Thanks
so
so much. Bye.
Bye.